Every trader starts here. You've heard Bitcoin mentioned at a family dinner, or a friend bragged about making money last bull run. So you open your phone and you type, "What is Bitcoin?" You're not investing yet. You're just curious. You probably don't know the difference between a wallet and an exchange. You think Coinbase is crypto. What defines level 1 is zero money in the market. All emotion, zero strategy. Don't let curiosity become FOMO. Learn the basics. What is a blockchain? What is a private key? What does market cap actually mean before you touch a dollar? The dangerous thing about level 1 is that the jump to level 2 often happens way too fast. You've seen the charts go up. Twitter is on fire. Your coworker just told you he 3x'd his money. And you think, I need to get in now. Welcome to level 2, the FOMO buyer. This trader buys at the top. Every single time. They see green, they buy. They see red, they panic sell. They follow influencers blindly and treat Reddit posts like financial gospel. The FOMO buyer's portfolio is down 60%, still holding a bag of coins they can't even pronounce. What defines level 2 is emotion-driven decisions. No entry plan, no exit plan. By the time something is trending on TikTok, you're already late. Start asking why before you buy. Learn what a market cycle looks like. Now here's where it gets interesting and dangerous. The altcoin gambler has survived their first loss. Maybe they even made some money. Now they're chasing the next 100x. They're in every Telegram group, every Discord. They're buying coins with cartoon dogs on them. Tokens launched 3 days ago, projects with zero utility and maximum hype. They tell themselves it's high risk, high reward. Really, it's no research, pure gamble. What defines level 3 is treating crypto like a casino. The portfolio looks like a slot machine. The brutal truth, 95% of altcoins go to zero. The ones that don't, you'll probably sell them too early anyway because you have no conviction, only hype. Start asking, what does this project actually do? Who built it? And is there real demand? If you can't answer those 3 questions, don't buy it. Level 4 feels like a big leap. This trader discovered technical analysis, and they are obsessed. RSI, MACD, Fibonacci retracements, moving averages. They've got 17 indicators on their chart. They watch the 5-minute candle like it owes them money. Here's the problem. They've confused information with insight. More indicators doesn't mean more accuracy. In fact, the more cluttered your chart, the more paralyzed you become. What defines level 4 is overcomplication and analysis paralysis. They know the tools, but not when not to trade. A common level 4 mistake is taking 10 trades a week and being slightly wrong on all of them. Fees and losses compound fast. Simplify. Pick 2 or 3 indicators you understand deeply. Learn that sometimes the best trade is no trade. And start thinking about risk management. This is where real traders start to emerge. The researcher actually reads white papers, GitHub commits, tokenomics. They know what a vesting schedule means. They understand the difference between proof of work and proof of stake and why it matters. They're not following trends. They're forming independent views. What defines level 5 is conviction based on knowledge, not noise. The researcher might not be profitable yet, but they're building the foundation that every higher level depends on. The trap at level 5 is spending so much time researching that you never actually trade. Knowledge without execution is just an expensive hobby. Here's the level most people skip entirely, and it's why most traders never make it. The risk manager doesn't just think about how to win. They obsess over how much they can afford to lose. They set stop losses before they enter a trade. They never put more than a set percentage of their portfolio into a single position. They understand that protecting capital is more important than chasing returns. What defines level 6 is discipline. They'll watch an opportunity pass if the risk-to-reward ratio doesn't make sense. The thing about risk management is that it's boring. There's nothing exciting about a 2% position size. But this is the single biggest separator between traders who last and traders who blow up their accounts. Level 7 is where the game changes completely. The on-chain analyst doesn't just look at price charts. They look at what's actually happening on the blockchain. Wallet flows, exchange inflows and outflows, whale movements, long-term holder behavior. While level 4 is drawing lines on a chart, level 7 is watching where the smart money is actually moving and following it. What defines level 7 is reading the market from the inside out. not the outside in. Tools like Glassnode, Nansen, and Arkham are their playground. They're not reacting to price. They're anticipating it. Level 8 has removed emotion from the equation almost entirely. The systematic trader has a strategy, a documented, tested, repeatable strategy. It might be algorithmic, coded bots running 24/7. It might be a strict manual rule set they follow without exception. Either way, they don't deviate. They don't revenge trade. They don't let a bad week turn into a bad month. What defines Level 8 is process over outcome. They know that even a great strategy has losing streaks. They trust the system. This trader has also accepted something most people never do. You don't need to predict the market perfectly. You just need an edge that plays out over hundreds of trades. Level 9 doesn't follow the market. Level 9 is the market. The whale holds positions large enough to move price. When they buy, charts go green. When they sell, retail traders panic. They're in closed group chats with other whales. They have relationships with exchanges, with project founders, with market makers. What defines Level 9 is scale. Their edge isn't knowledge or discipline, it's capital and access. Most people watching this will never be a whale. That's okay. Understanding how whales operate is one of the most useful things a retail trader can learn. Knowing when you're being played is half the battle. Level 10 isn't a trader in the traditional sense. The legend built something. They created a protocol, launched an exchange, wrote the code that others build on. They shaped the rules of the game that everyone else is playing. Think of the people who built Ethereum, who founded the major exchanges, who created the DeFi primitives that billions of dollars flow through. They stopped trading the market and started building it. What defines Level 10 is legacy. Their wealth is secondary to their impact. So here's the honest question. Which level are you actually at? Not which level you want to be at. Not which level sounds coolest. Which level describes your actual behavior right now? Most people who've been in crypto for a year or two are stuck somewhere between Level 3 and Level 5, believing they're at Level 7. That gap is where accounts go to die. The path forward is always the same. Master your current level before you try to skip to the next one. Understand your psychology, manage your risk, and keep learning, because the market will always be more complex than your current model of it. That's the 10 levels. If this helped you figure out where you stand, share it with someone who needs to hear it. And if you want a deep dive on any single level, drop it in the comments. I'll make the video. See you in the next one.